Vacancy rates have declined slowly over the last quarter. We have seen a drop in rates, and that's definitely helped with that. We've seen some buildings coming off the market with conversions in the downtown area, which has definitely helped those numbers. But to offset that, we've also seen some new buildings coming on, such as Stantec opening up. In terms of sales as well, we've seen the Edmonton Tower recently sell to Aimco. We've seen a lot more activity in the tech sector, but also just the ICE district in general has kind of created a new pulse for the downtown market, and that's been happening over the last couple of years since it's been announced. But now now that buildings are starting to open up and we're starting to see more things completed, we're really seeing more of an interest in the downtown area of Edmonton. We're seeing more activity. Things are happening, particularly in those AA buildings, even the A buildings. We're seeing a large flight to quality. Some of the bigger issues right now that we're facing is the B and C class buildings that are either now looking at conversions or dropping rates, and we're working with landlords right now to try and figure out how to properly position those properties so that we can lease them up and fill up some of the remaining vacancy in those. In the next 6 to 12 months, we're going to see vacancy continue to slowly drop. We will still be in a tenant's market. That is slowly changing, but it's not going to change dramatically over time. Those inducements and incentives are going to start to shrink and eventually go away, but we're looking at maybe 2 years out, until 2.5 years before it really becomes more of an equilibrium or a landlord's market. Right now we're seeing rates in the downtown area and some of those B-class buildings as low as $12 to $14 a square foot. You're still getting tenant incentives in the range of $30 to $40 a square foot to build out the space on about a 5-year deal. Over the next period of time, in 6 to 12 months, you still might find some of those, but that's going to slowly start shrinking, and you're going to have to invest a little bit more of your own money into the space. So now is definitely a really good time for a tenant to come into the market and see what's out there for them and what could work, even if it's not for another 12 months. We can work out deals. We can work out deals today. In the last quarter, we've seen a drop in vacancy. Again, it's not been significant, but we have seen that decline. Some of the landlords are repositioning their properties correctly, where those B, C class buildings, some of the C classes are being converted. The B class buildings, we're dropping those rates and still offering those incentives to attract tenants, to bring them in so that they're not going. Some of those groups that were maybe also looking at the A class buildings, where they're still getting an excellent deal, but the B class, it's just almost too good of a deal to pass up.